What's up, team? We are live. It's Thursday. Don't shoot the messenger day is what we're going to call it today. Yeah, don't have great news. And, we looked at this yesterday. We knew it was going to break out one way or the other, either to the good, higher, or to the bad, lower. And mortgage bonds just weren't happy today at all. They weren't happy. They were an upset bunch today. And it shows in the charts, which we're going to take a look at here in just a second. Also, today there's a lot of crypto news, like I would consider to be mega bullish. So we'll talk about that. A couple things I've been telling you about for a while. I'm not a victory lap type guy, but I do want people to know when you have received good information. I try to provide you with good information. Derrick Evans here, home loan specialist. Want to buy or refi? Give me a call, shoot me a text, shoot me an email. NMLS 155010. All right, let's go to the charts. Let's dump this guy right here, and here we go. So yesterday we were looking at this, and the best thing that we had to go off of from indecision candles was this one. And we had that indecision candle yesterday, which they always scare me. It usually means that there's people with deep pockets who know something's coming, and the indecision candle sort of is like a fake out for us. Like we just don't know. They do. Last time we had one, big decline in mortgage bond prices. And remember, we want mortgage bonds to go higher, at least I do, so that mortgage rates will go lower. Lower rates are good. People like it. People can save money. People can refinance. People can buy houses in an increasing value market and get a better payment. So I think we all like that for the most part. And so we want to see higher bond prices, and we've gotten that. We've got a really great run here. Let's not forget about this great tear that we've been on. And it's normal, as I said yesterday, it's totally normal for us to give some of that back. Even if we, remember what I said yesterday, even if we pull all the way back to here, the bull run is still on. It's still on, but we need to bounce back off of that, though. And the bigger and uglier this candle is, that we got today, down 28 basis points for the day. Not much of a wick on the bottom of that thing. It just doesn't look good. We closed underneath the 200-day moving average. Look at this, folks. I mean, we breached the 200-day moving average. Very difficult thing to do. Knocked on the door 4 times. We got through on the 5th time, and we couldn't hold it. We couldn't hold the line. And so now we have retreated beneath it. And, tomorrow will really tell the tale. Unfortunately, I think we're going to see a retreat to this level of support. Perhaps even this one down here. And so this is why, Barry Habib is worth his weight in gold, and why you should subscribe to mbshighway.com, because he called the lock alert yesterday. I also was locking up here. Remember this when I was like, yeah, I'm telling people to lock. I'm telling you to lock. Why? Because it's such a tear. And, if you would get more run up, great float. And if not, then at least we are, in a position to hedge against downside. And, so we'll see how much worse it's going to get. The good news is, from here to this level of support, it isn't a big move. It's only 15 basis points. And then from here to here is maybe 25 basis points. So we have another 25 basis points down day tomorrow. And, then we are going to bounce off of that. Everything's good. Everything's fine. Everything's great. At that point, we're good to go. Because we're still coming off. This is the 25-day moving average here. This is the 50-day moving average here. And this is the 100-day moving average here. So we've got some support down here to help us through this. And, we very well may need it. So it was not what I was hoping to see today. Was not ideal for mortgage rates. But it is what it is. This is what it is. I did get one locked in today. We did not have a reprice at our bank today, so I think it was already hedged in. And perhaps some of the smarter capital markets guys out there saw the same thing that we did, saw the indecision candles, kind of expected this thing to pull back. Hopefully we won't see anything as ugly as this. Hopefully we won't lose 120 basis points. Maybe it'll only be 50 or 60. That would be fine. And then we can continue the march higher. As I hope, and I still believe that the Fed is trying to take rates back to those all-time lows. It just seems to be what's happening here. But it's not always a straight line. I mean, look at what we've been through. We went through this downturn. We went through this downturn. This wasn't fun. The markets just don't move in straight lines. So keep that in mind. And it's still a great opportunity right now from an interest rate standpoint to get a good rate on a refinance, cash out refi, And when you're buying, we're still locking rates that are super, super low. All right. A couple of things here. U.S. markets were up today pretty nicely. Just like ho-hum. Hey, just up another 271 in the Dow. Hey. 114 in the NASDAQ. No big deal. This is just normal occurrences these days. Oil, though, under $70. I think that's a steal. Gold's still at 1,800. I don't even know why I look at it. And then here's so crypto, there's a few things we're going to talk about with crypto today. Going to be a relatively quick video. I still got a lot of stuff to do. And, the Ethereum fork, listen, I'm not like an expert on this stuff, okay? But this hard fork, the London hard fork, is a pretty big deal because what it does is it reduces transaction fees, which is one of the big downsides to Ethereum. And it also creates a more limited supply situation where eventually mining won't make sense. And so that helps a lot for Ethereum because that's the thing that Bitcoin really has going for it. Speaking of Bitcoin, JP Morgan and Jamie Dimon, who's the CEO. So JP Morgan is led by Jamie Dimon, who is a huge Bitcoin skeptic. And they have, not so quietly, thanks to Hugh Sun here, unveiled access to half a dozen crypto funds. So these are just for private wealth clients. Remember, we heard several different big funds and banks were doing this. They were opening this up. So on Thursday, the financial advisors at Chase were allowed to begin placing private bank clients. Private bank clients means you're rich. If you are a private bank client somewhere, they let you know. They're letting them into a new Bitcoin fund that was created with NYDIG. And NYDIG is an amazing firm focused on Bitcoin. There's an incredible video. I can't remember the guy's name who runs that. Super smart individual. Him talking to Michael Saylor, that was absolute Bitcoin porn. If you're into Bitcoin, go look up that video of Michael Saylor. Just type in Michael Saylor and NYDIG right here, NYDIG. And it is amazing how smart these guys are and how they have figured out how this is all going to work. But NYDIG is actually bringing Bitcoin to people. And apparently they brought it to JP Morgan, which is phenomenal. Remember, we talked, I think it was 2 days ago, about the SEC chair talking about regulation for Bitcoin and for crypto in general, and how that's part of the path to Bitcoin 1 million. And this is how also it works, right? You see the banks now, the Chase is huge. And Diamond's a bear on Bitcoin and crypto in general, but the demand is there so much that he has to even get ahead of the game before the SEC makes it super crystal clear and squeaky clean. He has to go to NYDIG and get ahead of the game because he doesn't want to lose those clients. And at the end of the day, people and their money, I always tell you this, you vote with your money. You vote for who gets to exist with your money, and the powers that be have to listen to you. You think Walmart has control over you based on what's on the shelves? No, they're putting the stuff on the shelves that they know you buy. And they're tracking all that stuff too. I'm not going to go into that right now, but that's all that stuff is tracked. So the sources declined to be identified, speaking about the offerings, each citing an awkward fact that JP Morgan CEO Jamie Dimon has been one of Wall Street's most outspoken skeptics of Bitcoin and related digital assets. So it's hard for them to get a lot of information on this, but this is good journalism. Check this article out for sure. And here's another one. So there's some senators. Now, this is not something that's done. This is not a done deal situation, but there are senators, and it's going to be voted on very soon. Senators who have moved to exempt Bitcoin and other crypto miners, so Bitcoin miners and other crypto miners, from a proposed U.S. tax rules. Now, what this specifically means is a little bit quirky. I'm not going to get into it, but you can read the article. But essentially, what's important about this is that legislators have recognized that having Bitcoin miners here in the States is actually very, very good. It just brings a bunch of money here. That's all it does. If you think about what Bitcoin miners are doing, they're basically just printing money. I mean, they're printing tokens, they're printing coins digitally, but that's effectively just printing money. So if you can incentivize them, which you really need to do because mining is a hard, very thin margin thing, if you can incentivize them to come here by taking away a tax scenario, you bring all the mining here. Listen, this is a good way for the U.S. to dominate. China has basically said we don't want cryptocurrency, and that is a humongous mistake on their part. They're going to have their own cryptocurrency because they want control over everything, but the world is going to run past them. It's going to lap them economically. If the U.S. can be the country that has the stronghold on this, I can't even explain to you how big of a deal this is, especially as you project out into the future. I'm talking 10, 20, 30 years from now. So this would be genius. It's going to be voted on later this week, and I'll follow up on that. Keep an eye on this. This is a big deal and should not be overlooked. Okay. Are we going to do like a live? Should we? Is somebody commenting right now on a different video? Bob Pot. I love that name. Bob Pot. What are you doing right now, Bob? So let's see. How do I get rid of this? By the way, I love the comments. Drop me comments on the YouTube side, on the Facebook side. I'll always try to get back to you. So again, what we're looking at for tomorrow is we want to see how this thing reacts. We got a jobs report that's coming out that a lot of people are like, we have no idea what's going to happen with this jobs report. Will the jobs report be a big deal, or is the market? This is what I always try to teach. Is the market already planning on moving a direction, or they're going to blame the jobs report either way? Which is true. The truth is the market is already planning on moving in direction. They're planning on potentially using the jobs report. There are people already who know what the jobs report is going to look like. And my guess is that, we're going to see bonds get hit again tomorrow. But it's possible we could recover from this. We could quickly recover from this if we tomorrow get a nice candle that takes us back above the 200-day moving average over the weekend. That would be huge. That would be huge because now we're closed above the 200-day moving average, which sets us up for a nice move higher next week. That would be really, really big. I don't think that's what's going to happen, but if you want my most optimistic situation, that would be the most optimistic situation. The more realistic optimism here is going to be a pullback to either, this level, maybe even this level here before we then continue to move higher. Should we continue to move higher? So we'll see. All right, team. I'm going to get out of here. Sorry for the bad news. Don't shoot the messenger. I love you all. I'm available if you need me always. Talking home loans, interest rates, buying, refining. Give me a call, text, shoot me an email. Have a great day. Talk to you soon.